Matt, you heard us go over the numbers. What jumps out at you?
A few things. The loss of revenue to China. They're talking about an $8 billion headwind there. I think that's a little bit worse than people expected. I mean, having said that, the fact that that number is so big and they're still holding revenue steady, I think is really impressive. The other thing I'd point to is the gross margin line. Gross margins are going up. I would have expected that China revenue would also have a higher gross margin. So they're also working against that gross margin headwind and still able to improve gross margins. I think those are the two things that really stand out to me.
All right, I'm going to follow up on what you said about gross margin, because the reported gross margin on an adjusted basis for the first quarter was 61%. Analysts were looking for 71%. And the goal, according to the CFO, was to get the gross margin back to mid 70% range by the end of the year. Are we still on track for that, do you think?
I think so. Just again, that it's really the adjusted margin, right? So you need to take out the headwind from them writing off inventory to get an apples to apples comparison. And it looks like gross margins are moving up again. And I'd also would point again to that China headwind. That was a product that wouldn't have been affected by the difficult ramp of Blackwell. So ostensibly would have had a higher gross margin contribution. So that going away becomes a bit of a headwind. The fact that they're working through that and growing gross margins, I think, is a great sign for the company.
Is there a sense here, Matt, when we talk about the development costs that have gone into it, I know there was some concern, is that kind of behind it? I know there's still ongoing costs that are always going to be associated with, but kind of that bulk, that front load of that, is that behind the company now?
And sorry, you mean the development costs
for the Blackwell, yeah.
Yeah, so my understanding is once we got past January, February timeframe, things really started to improve. And so since that point, I think they're seeing yields improve at TSM. I think their customers are having fewer failures. And so all of that helps them on the gross margin side of things.
So when we talk about what the company will try to articulate as far as for the long term, I don't just necessarily mean for the next couple of quarters, and we have to wait for the conference call, which is at the top of the hour. What exactly do you want them to articulate? Is it selling more Blackwell? Is it a broader universe of customers beyond what we have? Is it some sort of easing of U.S.-China relations that would allow it to penetrate that market? What?
So, it's really hard because Jensen's always so positive about the future of AI. Now, having said that, the concerns have always been, what does spending look like next year? Where do applications using AI show up, particularly given all of the spending that's happening to support AI? And I think that there are a couple really positive messages there, and I think we'll talk about agentic AI, creating those use cases. And then in terms of spend, I think they can point to all these new contracts that have been signed with sovereign nations over the last month, 2 months, 3 months as being really additive to that hyperscale base that supported them, and also highlighting exactly how important the world sees AI as being.
Hey, Matt, I'm just going to interrupt you for just 1 second here. We need to correct a few numbers. Scarlett, why don't you go ahead here? There are a few numbers that had crossed the wire a little bit earlier. There are a few corrections to that, and we just want to make sure we're very clear on what these numbers are. Scarlett.
Right. So I'm looking at first quarter adjusted EPS. 96 cents is the reported number. Analysts were looking for 93 cents. So by that metric, we are looking at a beat for the first quarter. Again, this is for the quarter that ended. First quarter adjusted gross margin was 71.3%. Analysts were looking for 71%. So that is slightly higher than anticipated and pretty much where the company guided to. In addition, the first quarter data center revenue also meets analyst estimates as well. So again, a couple of corrections here on the first quarter adjusted EPS, adjusted gross margin, both coming in higher than anticipated, and data center revenue meeting analyst estimates. Matt, in terms of what Jensen Huang is likely to say on the conference call, what kind of detail do you expect he is able to go into when it comes to the outlook here for China?
I think certainly they'll reiterate that they don't expect to sell the H20 into China, right? We've seen the write-off, so they're kind of stuck there. Obviously, there have been press reports about a potential successor to that chip based on Blackwell architecture. I don't know whether they'll go in depth around that. They have talked in the past about having given up only a portion of the China opportunity. So you could see them come in, or him come in and talk about, with the new restrictions, this is how much of China we can capture. But I also suggest that at this point, when you look at, not consensus necessarily, because, for instance, I haven't adjusted my estimates, but when you look at street estimates, I think there's been an assumption out there that they might not get any revenue from China. And so if they're able to give any kind of optimistic outlook about the potential for some revenue moving forward, I think that would be looked at positively.
Yeah, I just want to point out, too, a couple other numbers here. We're talking about a company still sitting on more than $50 billion in cash. I know no one really cares about the other units anymore, but if you do care, the gaming and AI PC business did have a record quarter, $3.8 billion. That was about 48% growth. And just before we let you go, Matt, I want to go back to some of those deals that we kind of knew publicly already with regards to the data centers and AI business here, whether, of course, it was the deal with Humane over there in Saudi Arabia, with Stargate, of course, the plans to work with Foxconn and the Taiwan government to build an AI factory supercomputer, as well as some of the joint initiatives they have with Alphabet and some of these other companies here. When we talk about the ecosystem, the Nvidia ecosystem and its reach, I do wonder if that becomes, I guess, for lack of a better phrase, the moat. That even if there is a slowdown in spending, this is a company now that basically has its tentacles in so many areas of the technology space that even if a competitor was able to sort of come up with a comparable chip, how long would it take it to even sort of release that grip that Nvidia has in this space?
Yeah, I think it would take years. And in part, it's what they've done with CUDA on the software side. So it's not just that they've built that software, it's also that there's a whole generation of AI specialists who've been trained on CUDA. When you think about all the penetration they've had in various places, that's hard to get past. And then you just look at it from a scale perspective. Nvidia, again, doing 45 billion last quarter, the bulk of which is data center. I mean, there's just no one close to that right now.